Hey there, traders, checking in on the stock market today. Consolidation out there on many names and sectors. We'll look to see whether it's remaining healthy for the bulls or not. And it's debate night tonight, 9 p.m. Eastern. We're going to finally hear some in-depth, emotion-free, detailed plans as to how we're going to see policy changes implemented by either of these two individuals to change the way things are going and be better for everybody. Hello, and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. So we can see on the daily time frame, today's SPY did break that low of yesterday, but really no bear follow through. So if we see some further downside tomorrow, the daily consolidation will be underway. We'll be looking for a daily higher low. I guess you could say the daily consolidation is underway. I need a bit more follow through if I'm going to be looking to call it a daily trend change. Need that higher low and higher high. So the goal for the bulls on any further consolidation is look to set a daily higher low compared to 319.80. Then we would have to break 334.96 for that convincing trend change. If we were to open green tomorrow and then just go and break resistance, that's not a clear enough pivot for me to call that a daily trend change. I would still be viewing that all as the same move. A support break of less than 70 cents, less than 60 cents is not enough for me to call it a daily trend change. So no major red flags at this point. Still low volume. Volume's been dropping off 4 days in a row, and we're going to likely see the biggest shift in probabilities as far as betting sites and things like that with who's going to be president or who is most likely to win after the debate tonight. So I do expect the futures market to see some volatility in response to those changes in probability. QQQ, daily inside bar today. And we had that high of 277.20, which broke, but no real follow through. And we ended up with a very clear base of support at the low of the day. 275.37, we held it by 10 cents. And then at the end of the day, we held it again by 15 cents. So that's a key short-term support level into tomorrow. If that were to break, daily consolidation is underway. And we're then looking for the higher low compared to 261.22. All tech sector names, if this is as much weekly bounce as we see, and we were to lose the daily uptrends from here, it would be a big red flag that we are likely to confirm weekly downtrends. So bulls can't be done with this weekly bounce yet. We have to see another daily higher low formed and continuation. And that goes for Amazon, Apple, Facebook, Netflix, you name it. We need more than this. If our weekly lower highs are being set this quickly, again, there's no major indication that that's taking place, but we just need to be always looking ahead. And if that were to be the case, the bears would love it. IWM, daily inside bar today. If it breaks bearish, the daily consolidation is underway, and we have to keep reminding ourselves that IWM, XLF, and XLV all still need a daily trend change, and SPY. All of them need a daily trend change. QQQ already has it, but it's the only major sector that we watch that does have it. So if we break the inside bar bearish, we need to then hold a daily higher low compared to 142.09 and confirm a daily trend change into next week for us to be looking for bounce follow through. XLV, daily consolidation underway. So again, have to form the higher low compared to 170 support. Any failure to confirm a daily trend change from here is a red flag for not only the sector bulls, but the S&P 500 bulls as well. XLF, same deal. Looking for a daily higher low compared to 22.94. Daily trend change needed. Biotech sector. Looking for a daily lower high to form compared to 116.64. And then we'll look for a higher low compared to 105.89 and a tightening daily range. I haven't really liked looking bearish on XBI the last couple of days, and that's because it's been throwing me off a little bit where on a day like today, we have healthcare consolidation and SPY consolidation, but a green day for XBI. So not really liking any kind of bearish entries personally for XBI. I do expect that daily lower high to form, but a bit more tricky to try and time that daily lower high being set. So at this point, what I would like to see is just a continued tightening daily range and then eventually play the break of that tightening range sometime next week. Sectors that stood out strong today, SMH, the semiconductors, bull break of daily resistance 174.74. We had NVDA break its daily resistance of 53, make that 532.60. It broke it bullish. MU earnings reaction after hours is bullish. So semiconductors are bullish. Once we top out, we'll look for a daily higher low to form, and the correlation has been there to the tech sector. It's just a bullish favored correlation for the semiconductors, and this base of support was very key while the tech sector kept dropping to incremental lower lows. Along with the semiconductor strength, the solar sector is on absolute fire. We had a beautiful daily equilibrium break bullish. We're now up 8% plus from that bull break. Look at the response to the COVID dump and bull move. Look at the volume on the monthly time frame. There is a massive capital shift out of oil names into solar names over the last 6 months, like the market has never seen before. And that's important to pay attention to as we head into the election, as well as Biden would be more favorable for the sector than Trump, and something to keep an eye on as well. The VIX, not really any information here. Still just seeing a tightening range, and it's all about 25.20. Make that 24. We already broke that level. So a little incremental lower high and lower low on the daily. Our weekly lower high looking set. High, low, lower high. All about 24.80 from here if we were going to confirm a weekly downtrend. The dollar consolidating on the daily, no longer a potential daily bull flag in my opinion. The consolidation is too significant, and we're now watching for a 4-hour trend change back to the bulls to set the daily higher low. And we would have to lose the daily uptrend for weekly consolidation to be underway. But for now, just looking for a daily higher low. You can see the 2 days of the pullback certainly aligning with gold and silver's 2-day bounce. And the inverse relationship between the dollar and metals is the strongest right now as far as looking at all of our assets. The S&P 500 and cryptocurrency is not seeing a tick for tick inverse relationship with the dollar anymore, but the metals still are at this point. So we're looking for the metals to give us daily lower highs when the dollar gives us a daily higher low. And there's lots of space for that daily lower high to form. That being said, patient bulls are waiting for this move to top out. They're entering on the daily higher low, and they're using 1848 as a potential stop level. First things first, though, we have to top out on the bounce and lose the 4-hour uptrend for that daily consolidation to begin. And silver's the same thing. Miners is the same thing as well. We're looking for a miners daily lower high with tons of space for it to form. And then there's a good amount of space to be looking for a daily higher low compared to 37.08 from there. Oil. Big bear break on the daily today, which is giving us a weekly lower high. So we've got our high of the COVID bounce, low of the dump, lower high is 41.72, and now it's up to the bulls to try and hold 36.58 for a weekly higher low to remain in the tightening range. If we were to break 36.58, we would be confirming a weekly downtrend and confirming further monthly consolidation on this oil bounce top. Natural gas. Solid daily consolidation. This is more than the bulls were hoping for because that makes the daily trend change that much harder to follow through. It's a bit of a double-edged sword. If I'm looking for a bullish entry, I like this big of a pullback because my risk is much better playing off of this low. That being said, it's harder for the bulls to confirm that daily trend change. So keeping an eye out for 4-hour oversold conditions, and we're on the verge of it right now. We are anticipating a daily higher low, but if this pullback keeps going, we will then be looking for a daily equilibrium and tightening range to form as opposed to a daily trend change. So scouting that daily higher low over the next couple of days, no sign of it at the moment, but pretty darn beat up on a lot of time frames. Hourly RSI is now down in the teens. So if I wanted to be an aggressive bull looking for a daily higher low, I would be scaling in here and a bit lower with 178 as a stop. Little trade review. I was trading, what was I trading? NIO, nope, that was yesterday. Today I traded PENN. So it was a falling wedge, and I should pull up my orders here. Pause. So the setup for PENN is a daily lower high potentially being set. Consolidation day today. We saw a headline that led to a bearish reaction where I think it was the Tennessee Titans, 2 football players, 3 football players, and some staff getting coronavirus. Any coronavirus on any sports teams, we see a bearish reaction to the gambling tickers because any threat of shutting down sports cuts off revenue. So that makes sense. So with that news headline, we know RSI levels can get more overextended to the downside than usual, but we've watched the PENN bulls buy these dips hand over fist time and time again. So I was looking for a bounce on this bearish reaction. The 15-minute RSI was down in the teens, just getting to the teens, and the 5-minute RSI was crushed as well in the low 20s and also eventually got to the teens. So big time disclosure here. Do not trade the way that I'm about to say that I'm trading. I'm doing this review because a member requested it. Do not trade how I'm about to show you how I traded if you have been trading for less than 4 years' time. Should be an automatic no, because this is the kind of style that will get you in trouble if you are not disciplined with years of proving to yourself that you have disciplined. I promise you will get yourself in a lot of trouble on this kind of play. The play is a falling wedge. And I did another trade review of NIO showing that falling wedge and how I played it. And I did this one, but a bit more actively because I was a bit too soon on my entry. So I was just watching this 1 minute downtrend that was in play for an hour where the bears just had complete control with lower highs and lower lows. So my initial first entry was on this bounce from this low. And you will see that when we get a certain degree extended to the downside away from this 1 minute exponential moving average, we generally see short-term bounces to allow that moving average to play catch up and to test it. And it ended up being a bunch of rejections, but it's when we start to pull away, that's when we get that waterfall effect. We were oversold on every time frame from the 15-minute on down, and that is when I like to begin scaling in to play an oversold bounce. At this point in time, I was playing off the low of the previous day, 68.20, and I made my first entry at 68.77. So that's right around here, and we then saw this little bit of a bounce. But I knew, watching the 1 minute exponential resistances, that the bulls have proven nothing on this bounce. It's a 1% bounce off the low. We are holding the low of yesterday, but I'm playing against the trend. I need to be protective. So I made an entry at 68.77 and I sold half on that bounce at that resistance, the exponential moving average resistance, and that was a 35-cent gain. And that's 0.5%. So you might say, big whoop, 0.5%. But what that does is puts me in the driver's seat and complete control of this trade, because now my break-even level has gone from 68.77, and you subtract 35 cents from that, and you're looking at 68.42. So my break-even is now under the low of the day at that point, and we ended up breaking the low, seeing no follow-through. The candle that broke the low of the day getting a bounce. Then we broke the low of the day again, straight into a bounce. When I start seeing the low of the day leading straight into a bounce, I start scouting falling wedges in the way that I would draw it here on this 1 minute time frame. I generally don't use the 1 minute time frame, but it was clear that the bears were strong, and it was clear that the 1 minute exponential moving average was coming into play. And there's a bunch of different ways that I could draw this, but essentially just watching something along these lines. And so from that point on, I decided, well, if we keep dropping, I looked at the 68.20 level, the low of yesterday that I was playing off of, and I said, well, if we're going to break that level, it's going to stop me out of my half position. I'll have a tiny loss, and that's fine. I don't care about that. But, lost my train of thought. But I don't want to stop out when the 5-minute RSI and the 15-minute RSI are both in the teens. I know we're going to be about to bounce. The fact that I sold half of my position for small profit means I have half of my capital that I'm willing to put to use here back in play again. So that's what I did. I entered, I sold half, I re-entered half on the break of 68. So 68, psychological support broke. I like playing psychological support breaks when looking for oversold bounces. So that happened right here. So I entered on that bear break of 68. And again, very quickly selling partial position, because the last thing I want to do is be in my full position and we drop to a lower low, because there's nothing I can do. There's no action I can take to alleviate the loss. So I sold half again real quick. This time I only went for 27 cents. So now my half break even went from 68.42 to 68 teens. And again, it's just keeping me more and more comfortable. Half of my capital ready to go again, and an average in the 68 teens. We then dipped down again. I bought that dip again, Every time we hit a new low, I just bought that low and then sold a few minutes later for that bounce. So here was another one, even smaller, 18 cents. So now my break even is under $68 and I've got half of my capital. This was a little short squeeze trade on ACB, just a quick flip there for 1%, 1.5%. And then I ended up just holding my half position that had a break even under 68, and the bounce finally played out and I sold 69, what was it? I forget, I just pulled it. 69.50 something, 69.62, and that was almost near the top of the bounce, and that was just luck in the sense that, you know, I was looking at this move and saying, okay, we're just looking for a 15-minute lower high to be the result of this bounce. I'm happy with the gains. I'm locking it in. So that is how I played the falling wedge, with a bunch of quick flips, a couple minute long trades. And how could this have gone against me? It could have gone against me by bears getting follow through. Me seeing a couple times a bears not seeing follow through. And then next thing you know, we flush and drop 2% under 67 very quickly. And then I accrue a day loser. And that's when I'm wrong. And that's when I just have to cut it, because I'm no longer in control of the trade. So I'm very aware that that could happen. And the position size that I'm trading with on PENN is probably half the position size that I trade with on Tesla, because I trade it less often and it's more volatile recently than Tesla has been, which means my position size needs to reflect that. So that was a little bit scatterbrained, but that was a solid trade on PENN today. Playing against momentum. One of my edges as a trader are oversold bounces with years and years and years of sharpening that edge. So again, if you do not have those years of experience, trying to take this kind of trade can end up very dangerous. So that's your double disclaimer on fighting the trend. Do good things. We'll see you tomorrow. Getting a couple figs every couple of days. Putting on a good amount. Too good. Never had fresh figs growing up in Massachusetts. Getting a good compost pile going, starting to collect my grass clippings as I mow. So a nice mix of chopped up leaves and chopped up grass. Greenhouse getting going. We'll have to thin this out in a week or so. Fig tree to take over to the trader house. Sometimes you just stumble into a thing, and my thing just so happened to be ducks on the wall.